Hi, how are you, my learners? Hope you are doing well. Today we will be doing balance sheet. Remember, this amount was taken from our previous lesson, which was fixed or tangible asset, note number 3. Alright, now we are going to continue with our information. We are given our information here. I hope my information is visible. Information number 3. The following figures were extracted from the accounting record at the end of the financial year on 30 June 2012. Remember, in accounting, the first thing you start by recording your balances. Alright, I'm not gonna record this one and this one. Why? Because we are going to do this note separate. Alright, our fixed deposit, let's go and record it. When we talk about fixed deposit, it's also known as what? As financial asset. Financial asset or investment. It can be financial asset or fixed deposit or investment. Please note that one. Then we are given on our trial balance under fixed deposit, we are given how much? We are given 203. I'm recording whatever that I'm given in brackets. Now I'm given what else? I'm given mortgage loan. Let me go and record it now. Mortgage loan is 306 240. I'm also given I'm done with this one. I'm given debtors control, and we all know debtors control, they goes to trade and other receivables. How much is my debtors control? 68,000. Then I do creditors control. I know that one goes to trade and other payables. It's gonna be 77,500. Then the following one, provision for bad debt. That one, it must go to trade and other receivables. We decrease provision for bad debt. Remember, on this one there are no adjustments. And then we have SARS income tax now. And then now we got SARS income tax. Please listen to me very careful on this one. When we check now, the SARS income tax which we are given from our trial balance is 175,000. This amount is the amount that is paid already. Okay, now after assessment, let's go and compare. Every time when you come to this one, you must go and compare with the income tax on the adjustments. Now every time when this one on the trial balance, let me say trial balance is bigger than the one on the adjustment, trial balance higher, adjustment lower. And then if you have that scenario now, it means that you overpaid SARS. SARS is owing us. So now how are we going to get the amount that SARS is owing us? We paid 175. In fact, we are owing how much? We are owing 168,000. Then the difference will be how much? It will be 7,000. So that means now SARS is owing us, we are having what you call now a debit balance. But if this one was lesser than this one, for example, maybe here I'm having 157, I'm just making an example here, and then on the adjustment we have what we call 168,000. So that means the one that is on the adjustment is bigger than the one that we paid. Then in that case, it means that we are owing SARS. How much are we owing SARS? It's gonna be 168 minus 157, and then it's gonna be how much? I think it's gonna be 11,000. So that money, it must be shown under current asset as SARS income tax, because in this case we are owing SARS. It's a liability for the company. But on the scenario that we have here, SARS is owing us, it's an asset on our side. So that's why the amount of 7,000 now, it must be shown under trade and other. Under trade and other receivables, it's gonna be 7,000 here. And then now we can continue with our information. We can continue with our information now. Okay, let's continue recording what we are given. We are done with provision, we are done with this one, and then now what do we want now? We continue with our information. We have an expense accrued, and we all know now that expense accrued, it means that we are still owing, and that it must be shown under trade and other payables. Let's go to trade and other payables now, and then we are going to record 18,300 now. Let's continue with our information now. We have a bank, and this one is a debit balance. If it's a debit balance, it means we have money in the bank account. But if it was a credit balance, it was gonna be a bank overdraft. And if it's a bank overdraft, it must be shown under current liability as bank overdraft. It means that we are owing the bank. All right, then we have a debit balance of 61,340. Now let's continue with our information, and then we have petty cash 3.2. We also have what we call now a trading inventory, which is how much now? 118,000. We also have consumable stores on hand. Guys, on this one you need to understand your format. Your format is very important, guys. Under balance sheet, you must know what falls under inventory, what falls under trade and other receivables, cash and cash equivalent. You must know your format, guys. Please, on this one I beg you must know your format. Make sure you study your format for balance sheet. Now let's continue with our information. We have now what we call now shareholders for dividends. We know that this one is a final dividends, and it's declared but not paid. So if something is declared and not paid, it's a liability for the company. It must be shown on the current what liabilities now, because we are still owing now. Then we are done with the recording what we are given. Then now we can go to our information now. All right, now let's continue with our information. Information number 4, it reads as follows. There are two fixed deposit at Sahara Bank. A fixed deposit of 98,000 matures on 30 December 2012. The rest matures on 31 May 2014. If I were to draw my financial year, we all know that our financial year start on July, August, September, October, November, December, January, February, March, April, May, June. So guys, here we are having a fixed deposit that will mature on 30 December 2012. You must understand what is a non-current asset and what is a current asset. Remember, when we talk about non-current asset, are those assets that last more than 12 months. But when we talk about current asset, are those assets that last less than 12 months. So now if something is maturing now on 30 December 2012, it means that now it is no longer a non-current asset, but now it becomes what now? A current asset, because we are going to receive it within 12 months. Then you go now to your financial asset. You take it out here. You take out the 98,000. Immediately when you take it out here, you must go to your cash and cash equivalent and edit here. Why do we edit here, guys? It's because it is no longer a non-current asset, but it's now a current asset, and that this is money, so it must go to cash and cash equivalent. I hope you understand this one. This one is very important. Let's continue with our information now. Number 5, the following relate to the mortgage loan from Kaya Bank. Interest is capitalized. When they are saying interest is capitalized, it means that it is added. Interest for the year has not been entered. It has not been entered, guys. So we have to go back and enter it now. Let's go now and increase it. 63,000. I think 240. We are given that interest. Oh, sorry, it's not 240, but it's 360. All right. Then the loan will be reduced by 52,800 over the next financial year. So guys, even this one is very important. Over the next financial year. Remember, when we talk about non-current liability, are those liability that last for more than 12 months. But when you talk about current liability, are those liability that last less than 12 months. But now, because this amount we are going to pay it within 12 months, it means that now it is no longer a non-current liability, but now it becomes what now? A current portion of loan, which will be repaid within 12 months. So that's why now we need to take it out here under non-current liability. How much is the amount? The amount is 52,800 now. You take it out here, and then immediately when you take it out here, you come here under current portion, and then you put it here now, because it's gonna be repaid within 12 months. I hope you understand this one. It's more or less the same with the fixed deposit. All right, we can continue with our information now. Information number Number 6. Now, shares and dividends. 100,000 new shares were issued on 1 January 2012. This has been recorded. It has been recorded. It means that now the amount which we were given on the trial balance, which is 1,825,000, it include the shares which were issued during the year. So here I'm going to have 1,825,000, and then now I need to prepare my return income, my return income, and then we are given the balance at the beginning of the year here. The balance at the beginning of the year under return income is 26. No, I'm sorry, it's not 26,000. Let's go and check it, the balance at the beginning of the year. The balance at the beginning of the year and the returned income is 39,000. Yes, it's 39,000. And then remember your format for the return income. It's gonna be balance at the beginning, and then in net after tax. It's gonna be buying back is gonna be dividends, which is divided into 2. We have what we call the interim, we have what we call the final dividends. Now we have the balance at the beginning, which is 39,000. The net after tax. Now we can go and check our information. Now we are given the net before tax, we are also given the income tax. Then how do we get the after? Is the difference between the two. Now then it's gonna be 560 minus 168. Then the difference between the two, 560 minus 168, is gonna be 392,000. Do we have a buying back? Okay, it seems like we don't have a buying back, but now I can just add a buying back here. Let me add a buying back here. Remember, buying back was introduced in 2014. 8. Let me just say 120,000 shares were repurchased at 3 rand per share, and this was not recorded. Alright, I'm just adding the buying back, guys. So that means now we are no longer going to have this amount here, because now we have what we call the buying back. Now I'm having my return income. Now I can go now and prepare my ordinary share capital. Allow me to prepare my ordinary share capital here. I'm gonna have my ordinary share capital here. Now let's go and check now how many shares were issued at the beginning of the year. When we check now from the trial balance, we are given 730,000. But guys, remember the shares that were issued during the year, they said that they were recorded. It means that the 730 includes the 100,000 shares which were issued during the year. So now how do I get the shares that were issued at the beginning of the year? It's gonna be now 730. It's gonna be 730 minus the 100. So that means now 630,000 shares issued at the beginning of the year. And then we all know we are given that information that 100,000 shares issued during the year, but I'm not given the price here. But I know that when I add this one and this one, when I add this one, the price at the beginning and the price during the year, all those things, it must give me the 1,825,000, because it's the total of these two. All right, then remember I have added the buying back, so 120,000 shares repurchased at, guys, when you come here it must always be an average price. How much is the average price? Remember, how do we calculate the average price? It's gonna be a total amount of shares issued divided by total number of shares issued. The amount is gonna be 1,825,000, and then the total number of shares issued is gonna be the 630 plus the 100. It's gonna be 730, and then on my calculator it's gonna be 250. So that means now the average price is 250. Then I just put 250 here, then it's gonna be 250 multiplied by 120. It's gonna be 300,000 here in bracket. Then how do I get now the balance at the end of the year? The 1,825,000 minus 300,000, it's gonna be 1,525,000. So how many shares were issued in total at the end of the year? It's gonna be 630 plus 100 minus 120. It's gonna be 510 shares issued at the end of what? Of the year. Then I'm done. Then you take this amount now, you go and record it under what now? Under ordinary share capital. I hope you understand this one. But remember, guys, once you repurchased shares, and remember the shares were repurchased above the average price, and we bought these shares at 3 rand per share, but 250 it from ordinary share capital. Then the difference now, it must come from the retained income. Now it must come from the retained income. Then now you go to your retained income, under buying back you open a bracket. It's gonna be 120 multiplied by 0.5, then it's gonna be 60,000. It's gonna be 60,000 in what? In bracket. But remember, guys, they said these shares were not recorded. This transaction was not recorded at all. And remember, when we repurchased shares, this money will come from the bank account. It's gonna be 3 multiplied by 120, which is 360,000. 360,000 must come from the bank account. Then you go back to cash and cash equivalent. Now you must take it out, 360, because we use it to buy the what now? The repurchased what? Shares now. And then let me enter it on my calculator now. Let me enter it on all right, let me enter it now on my calculator. It's gonna be 61,340 plus 3,200 plus 98,000 minus 360,000. Then I'm getting minus 197. Now the question is, now can I put minus here on the balance sheet? No, you can't put a minus on the balance sheet. This means that we don't have money in the bank. We're going to put a 0 here because we don't have money in the bank. but because this is a minus, it means that we are owing the bank. It must appear now under what? Under bank overdraft 197,460. I hope you understand this one. Why do we have a bank overdraft? It's as a result of the buying back of what? Of shares. And remember, they said this transaction was not recorded. That's why you must go back to the bank and record the transaction. Okay, now we can continue with our information now. Okay, we can just finish the return income now, because we have the buying back, and then we also have the final dividends. We were given as 219. But do we have interim dividends? No, we don't have interim dividends. We can go to our information. Interim dividends of 20 cents per share were paid on 30 December 2011. Guys, this one is very important. Check the date here. Remember, the shares that were issued during the year, they were issued on 1 January 2012, but we paid the interim on 31 December 2011. So let's go back to our ordinary share capital now. Remember, this one is at the beginning, but this one is during January 2012. So it means that, guys, by the time we were paying the interim dividends, we had 630,000 shares. Then we go back now to our return income. You open a bracket now, it's gonna be 680 multiplied by 20 all over 100, because we were given that the interim dividends is 20 cents per what? Per share. And I remember, by the time we're paying the interim dividends, we had 630,000 shares. Then I'm getting 126, and then when you add 126 plus 219, I'm getting 345,000. It must be in bracket because we are paying. Then it's gonna be 39 plus 392 minus 60 minus 345. Then I'm getting my balance at the end, and the return income is 26,000. Then you can go back now to your return income and record now that 26,000. This one is gonna be 26,000. Then how much is the ordinary share holders equity? It's gonna be ordinary share capital plus return income. 1525 plus 26, it's gonna be 151,000. Let's go to our loan. Then our loan is gonna be 36240 plus 63360 minus 52,800. It's gonna be 316,800. Okay, 316,800. But allow me to write this one in a different color. Allow me to write this one in a different color. This one in a different color now. Let me write it using a red color. This one is gonna be 316,800. This one's gonna be 551,1000. Okay, so now are we done? Let's go and check our information now. We are done with our information now. Let's go and close our balance sheet now. Then this one is gonna be 203 minus 98. 203 minus 98 is gonna be 105,000, and then when you add 105,000 plus 2132 310, you are going to get 2, 3, 7, 3, 10. Yeah, but allow me to write that one in a different color now, which is red. It's gonna be 2, 2, 3, 7, 3, 10. Let's go and get our current asset now. Inventory is gonna be 122,000, and then trade and other receivables is gonna be 68,000 minus 1,450 plus 7,000. I'm getting 73,550. And then now we need to calculate our current asset, which is 122,000 plus 73,550. It's gonna be 195,550. Then let's go and calculate our total asset, but allow me to write this one with a different color. Then it's gonna be 195,550. Then how do we now get our total asset? Now you just take the one in red color, you just add the ones in red color, and then you get what now? The total asset is gonna be non-current asset plus current asset. Let's add it: 2, 3, 7, 310 plus 19550. It's gonna be 2432860. It's our total asset. Now let's get the trade and other payables. Now it's gonna be 7,500 plus 18,300. I'm getting now 95,800 now. Then we can go now and get the total for current liability. It's gonna be 95,800 plus 52,800 plus 197,460 plus 219. Now I'm getting 565,060. Then how do I get now total equity and liability? It must be number 1, number 2, number 3. You add those three amount, and if you add those three amount, it must give you the same amount as total asset. Let's go and prove it now. 151 1000 plus 316 800 plus 5606. Then we are getting the same amount, which is 2,432,860, and then we are done with our balance sheet. Please do this activity over and over again until you understand everything. Thanks for your time. Goodbye.